Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Hey everyone, looking at Facebook on the daily and weekly. So big bear day today out there in the markets. Make sure and check all the videos. I'm going to be putting out a lot this weekend. Some today, some tomorrow. So Facebook lost the upper Bollinger Band as support. And we knew that was going to be a likely scenario today because of where we closed. And we know the upper Bollinger Band is going to continue to ascend. So we pretty much would have had to see a higher open in order to keep that level to start the day. We saw a lower open, so we knew it was going to be resistance. That right there is an indication that consolidation is coming. Even if we didn't have a dump day in the market, we likely would have set a lower high, lower low, and pulled back. So we have a spike in volume. All things considered, seeing the volume that we had in SPY today, this isn't a ton of volume, but the candlestick is absolutely bearish, and the close at the low of the day does indicate further downside is coming. We lost the 10-day moving average support. Middle Bollinger Band support is 125.71. That's the next key level. And as long as we form a higher low compared to 122.78, the higher low pattern remains intact here on the daily time frame. So another reason that we're looking for further pullback is this big bearish reversal candlestick on the weekly. And it is an inverted hammer, almost a gravestone doji. A red week next week will confirm that bearish reversal, and we will look for a pullback likely to the 10-week moving average support in the mid 123s. So, not sure if I said it in the last video, I'm sure I did, but if not, I was saying it in the chat room. Just looking back at the previous history, we could assume that today was going to be a bearish day because every single upper Bollinger Band weekly rejection, or every test, has been met with a rejection. So we know the odds are significantly more likely that we were going to reject from that the upper Bollinger Band resistance rather than break above it. And we were right at that level after the close yesterday, so we knew it would take a green day to close above it. That hasn't happened in a long time, so the odds were a red day was coming, leading to further consolidation. That's exactly what we got. Let's now look at the 5-minute chart and see some indications of that weakness. And again, 20-period, 5-minute moving average resistance or support is so very key on the shorter term time frames. If you're a swing trader, you don't care about the 5-minute chart. But if you are not, if you're a day trader or shorter term trader, you do care about it. So bulls tried to hold up here the first 20 minutes of the day. This right here was your bearish candlestick. We had a tight range. It broke, new low of the day. That's your signal to go bearish. And we can see the 20-period moving average resistance wasn't even tested for 3 hours. That shows you how severe that downtrend was. And then it was tested and we rejected from it. We got above it. Look at the bullish reaction once we got above it. Nice short-term day trade there. And then once we lost it, a dump at the end of the day. So the indications that this 20-period moving average gives you are so vital for day trading. Again, this is my favorite #1 useful tool looking at 5-minute charts, and I use it on the 2-minute chart. If I zoom in on high volatility, use it on the hourly chart, daily chart. 20-period moving average, very important. So that's the rundown on Facebook. We're looking for further pullback, but we can look for support at that middle Bollinger Band on the daily, 125.71, or the 10-week moving average, which will be in the mid $123 range. I appreciate you watching. Have a great weekend.